The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, 26th of September, Thursday. My pleasure to be here Monday through Friday, market days. And great to see so many of you last night at the meetup, and just really appreciate you coming. I certainly enjoyed it. Hope you did. And we just went through a whole bunch of things. I never know which way it's going to go. I don't even know how I'm going to start it, ever. I know that I always write down what I would like to cover. I know how to cover it. I know what is needed in covering it. But I just never know which way it's going to go until I start. I have no prefix. I do not say I have to do this thing, go to that, because I want to hear what happens. This time I ask questions earlier than usual, and that can just spin us off on a different track. Very important. So, that was the meetup, the 10th birthday anniversary of the Boston Investors Group. Always meets over at MIT, Cambridge, Mass, and we really had a great time. Great food, although I didn't participate much because I did Tom's show from 4 to 6. That was sudden. And so I started to print out what I usually do and zip over there. But fortunately, I don't live that far away, and I got there plenty of time. So let's go to the market. Now, as far as I'm concerned, I'm looking at a situation, and the situation says, when you start to get into a bear phase of a market, it means that all news is treated as potential for an up spike, but that up spike can always fail. It means that no matter what happens, at a certain point you're going to see lower highs and lower lows. A very strong bear market, lower highs, much lower lows. That's number one. Spent quite a bit of time last night discussing the VIX and bonds and other things in relation to questions that I had, really good questions. And I'll get to a little bit coming up in a few minutes. But I will mention 877-927-6648 is the number to call. Don't forget, tomorrow Steve's doing his workshop, his all-day webinar. Just a tremendous amount of information Steve always has, developing lovely techniques, and he takes a number of techniques and molds them to his own considerations and tests, and that's very important. And even more important here at TFNN, we're about education. This is the most education-filled news network, a financial news network that I know of. Of course, mostly, not all, but mostly technical, but there's a lot of fundamental stuff that's spoken about. Shouldn't say stuff. Fundamental information. And so this is just another one of those participating, ongoing series in the Tiger University. So please consider, going to Steve's all-day webinar. It's so informative, and it gives you certain guideposts and things to look for. We just love doing that. So my guidepost right now, I had a question about the SPY a little earlier. I thought it was a very good question, but I just got to review it now. Oh, I had a laugh. Steve was talking, and then suddenly he was off. He was talking about something, and then he came back, and then he couldn't remember what the point of it was. Of course, eventually he did get to the point. But it's so coincidental, because last evening when I came back, of course, I still had my TV running here in my office. So it was on CNBC, and I can't even remember what they had at that particular time, 11 at night. We had a pretty long session as usual. And I was doing some work and discussing with my wife certain things. And then I said, you know what, I don't know if I can do all that much more right now. Normally I like to just continue with my day's work. I thought I'd take a break, and I come back, and I'm just about to change the channel. I change the channel, and what do I get to? I get to Ellen DeGeneres. Now, periodically over the years, whenever I've seen her, I think her mind is so agile and facile. She is so clever. Might disagree on different things that she talks about. It's got nothing to do with it. I'm only talking about what she presents, how she presents it, and how clever it is. I remember Bill Cosby used to be like that. It just, at a tangent, she'd come out and say things. And what did she have? A whole sequence on forgetting. Not just forgetting, but how you come back when you're in the middle of forgetting what you were about to say. And then she had this thing about, in the conversation that people are having, you haven't said a word, and then suddenly you got to find, you just feel you got to say something. You say, and not only that, and then as you're about to say that, you're so busy thinking about barging in that you actually forget not only what you were about to say, but what was being said. And she says, and you say, and what? Yeah, not. And then she said, and what you do is you say, 6 of one, half a dozen of the other. Anyone want coffee? I thought it was really clever. Anyway, so I had a chuckle when that happened to Steve because it's just a momentary lapse and he got right back onto the subject matter. Just a pure coincidence. Just a mere, 12 hours later, the real thing happens. So, here we go. The Dow is up 26 at 15,300. The S&P is up 3.5 at 1696. The Comp Index is up 13 at 3774. You've got gold down 9 at 1326. You've got silver down 13 cents at 2175. High-grade copper bouncing around between 3.31 and 3.29. It's right now at 3.3, up 2.9. You've got crude oil stuck at 102.93, and bonds are down. Yesterday, at this time, I said bonds are up 0.5 point. Now they're down 0.5 point, and the dollar is up 25 cents. Let's do a couple of things here. For those of you who it was really nice to be able to talk about TFNN and last night and what I do and generally what's done here at TFNN, and that I'm a host, and that aspect. Now, what's even more important is that I know that many of you said that today you'll be tuning in, that some of you, actually there were a couple of people that made fabulous comments about Tiger TV, how easy it is to get, how smooth the whole thing is, the whole operation at TFNN. Kudos to all of those at TFNN who do such fantastic work. Kudos to Tom O'Brien for setting this whole thing up. Okay. Now, in the charts that I'm showing, in the Chapman wave methodology, you remember, I'll just quickly show this for those of you who are new. What does the Chapman wave trademark notation look like? What does it do? How can it help in trading? Well, here you've got the bars. They're just continually going up, and here they continue going down. So what I did over the period of years was to define and to essentially give you a reference point of sequences, number one, up sequences or down sequences. Number two is to basically grade each successively higher peak within the context of the Chapman wave methodology, within the context, number three, of the technicals involved, if you need them. Sometimes it's just pure chart pattern. I think I won't waste time today. If I do it tomorrow, maybe I'll do it just to show you just naked, what I call naked charts. Nothing but bars. Don't even have to have candles. How you can do the analysis. Hey, look at this. Watch this closely. Nothing. This is a chart of the Dow Jones Industrial Average. It has no technical indicators added, no trend lines, volume figures, Fibonacci levels, no channels, nothing. The next chart will show the same bars, but with a Chapman wave notation of the peaks and troughs. Now look at this. There it is. On the upside, I use uppercase letters, A, B, C, D. That's when you, remember last night I said, that's where you can, but you don't have to get the deepest retracement, but it's something where the yellow light goes on, the wave goes to A and then to B, even the anticipated C and D. That's when it flashes a cautionary light. But all you got to do is make your stops real tight. So this is exactly what happened at D. Pulls back, and then it goes A, B, C, D. You remember, I said that at D, you can't pull back, but you can, as the song says. Suddenly it goes to E and F. A bell rings so loud it can make you deaf. So what you going to do, which way to go? You sell at the high and you buy at the low. Well, that's that peak F, a little asterisk that says you will see how often peak Fs precede waterfall cascades. And that's what we saw. Remember, I showed the demonstration, showed you the Dow back in 2007 at that peak F top. Now, let's just go right back to where we are. in this one, you've got your requisite A to B to C to D. And this is the SPY. This is the trading vehicle of the S&P. This is the S&P depository receipts. However, there's a difference because in the SPX cash, and I prefer to use the SPX cash because that's the root. The SPY is a derivative. You've got A to B to C. Almost made a parallel high there, but I can't just make that up. It didn't happen, so it didn't happen. So it goes to a C, and there's a parallel wave count that can be continued from the previous one, which was peak F back on the 2nd of August, which says if everything fails here, you've got a parallel wave count. Keep in mind that the 9-period moving average, that black line, which was fabulous support, is now becoming a magnet, and then you got to be careful to see if it becomes a resistance or not. Well, the weekly chart is in C/G. The SPY weekly chart is in G/C. But the Dow, which to me is now a leading indicator in the weekly chart, is in leg E. It can go to an F, but it's an E with terrible really, when I say terrible technicals, I mean the MACD is way down here, has not crossed back to positive. So that's what I said last night, and I've been talking about it here before. I'm becoming much more enamored with the stocks are beginning to show me downside activity, even though we added another long this morning, but this is in a completely different sector, and it's just it's a very low price stock. It's just something we've traded before. We have kind of a nice feeling for it, and this is an opportunity where it could have a nice spring as a quick trade on a percentage basis. But anything I'm looking at now that's on the long side has to be in a sector that's done well. It has to be one of the leading stocks, not necessarily a leading price stock, but a leading technical chart within that framework. That's the only way I'm looking at longs at this particular time, or the very beaten down stocks that are starting to show that they have the tenacity to withstand the selling pressure because they are holding their own. They could become the darlings of any counter trend move to the upside. So that's how I'm looking at it. That's number two. The third thing about this whole aspect is the volatility index. So let me skip the VIX for just one step, the SPY and the S&P, to go to what I consider, as I spent so much time last night, and I usually do here, to say that the volatility index, you cannot ignore it. It has made a higher low bar than the previous low of 11.98 back on the 2nd of August, 5th of August. The low of September the 20th at 13.47 is above the 11.98 level. And if it starts to hit the 14.97 or higher level, it's demonstrating that on a shorter term basis, it is potentially able to make the transition from lower highs and lower lows to higher highs and higher lows. That's the transition I'm making, not in necessarily in my major indexes by buying or shorting, but I'm doing it in stock formation for my subscribers. But I'm really close to making decisions about the intermediate term. That's 3 to 6 weeks based on the Dow and the S&P. I'll be right back. Basil Chapman, 877-927-6648.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, and the Dow is up 32 at 50,305. S&P is up 2.45 at 1695. Here's the issue. In looking at the markets, there are a couple of factors that I have to take into consideration. Let's just go through them one by one. I mentioned the VIX, the volatility index. Let's just cover that again. Volatility index right now is kind of neutral. If you look at the very long-term aspect, I got to find that chart with the black background. It's done a lot more work. It's right at the lows within the 15 to 11 or $10 area. It can stay there for a very long time. We saw that all the way through 2004, 2005, 2006. Those of you who were listening to my show at that time, remember I said, as long as the volatility index remains low, it is buying pressure, and that lasted a long time. Then you got the acceleration to peak A, B, C, and then finally D back on October the 8th, October 2008, at 89.53, the bank crisis. Hey, you want to see something? Am I going to remember it? VXO? VXO.X? Yeah, good. Have a look at this. This is 103.41 on the volatility index. This is the Dow volatility index, but that's not the issue. Look at this. 172.95, 172.79, back on October the 19th, 1987. God, I'll never forget that VIX. Never forget that day, in fact. Actually, it's a very interesting. I don't want to waste time talking about it. So, the volatility index is very important in terms of, the volatility index, there's a special way to read it. Every single day I show my subscribers and I discuss the volatility index, what we're going to look at, why we're looking at it, what the parameters are, together with the Dow 120-minute chart, etc. But if you look at it, not just at the 120-minute chart, if you look at it here, in this particular chart, right, disappeared, it's right here, but I want to find it because it's really important, where I do the, nope, it's there, I know it's there because I looked at it just, UUP, nope, oh man, VIX daily, there it is. This is the volatility daily. You know, I've taught over here for many years, I've been talking about, for those of you who are used to looking at bull formations and find it easier to trade or work in the bull formation rather than the bear formation, if you learn how to put up the DOG, the diamonds, the Dow diamonds, and the DOG 1-to-1 on either side, and you do them in an inverse way, you might get a better feel for things by looking at the upside rather than the downside. Just I know it from what I see and what I hear. There are some people who are just, their bias is always to short, and that's their thing. They are great at it. Even a major bull market, they short. So what I'm saying is, in the patterns that you look at, it's not a bad idea to put in the inverse if you can. And what I've drawn in here are these continuous cup formations in the volatility index. So on the shorter term basis, it looks kind of wild, going 21.91 down to 11.83, 48% decline, that sort of thing, 28.3 to 29, 12%, about 11-12% rally. But that's not the issue. The rally that you're looking at has to do in the context of the formations, and the XIV is the inverse of the VIX. In fact, I must make this a little lighter. It just irritates me there. I want you to make it lighter by making it darker. Making it worse. Fill color. Let's make it nice and dark. There. I'm not doing it. Full color. Fill color. Make it. All right, I'll get to that. So what the issue is here is that if you've made a top in the XIV, it can go a little bit higher, but this is the topping area. What I really shoot is just another rectangle formation right there to say that's the area, the topping area you got to watch for. If that's the case, it makes it really easy. You just say to yourself, hey, if the XIV starts to break out and go from the 29.45 high, but above that it goes to 30.90 or 31.50, the volatility index, the VIX, is going to drop, and it should go to a leg D to the downside, start to tackle the 11s. If, in fact, this thing breaks down from peak D, the XIV, and goes down to 26.50 to 25.50, you're going to see a spike in the VIX. So learn how to do these different parameters on the upside and the downside in simultaneous mirror image. It can really help you. There's just a little education there. My thing right now is that the volatility index starts to trade up there in the 15, I'd have to say in the 1570, 80 area, and then suddenly gets to 1620 or higher. There's just a real good chance you started the next cup formation and the market.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everybody. Basil Chapman, Tigers Editions Hour, and the Dow's up 30, S&P's up 275. So, remember just now I was talking about higher lows and higher highs, and then lower lows and lower highs. That's basically it tells you about buy signal to buy modes and sell signals to sell modes. So it's really important in this particular phase because we know that there's going to be a confluence of factors within the political spectrum as well as within the economic spectrum coming up in October. October is always called one of the worst months. I happen to think that it's one of the best months because the rally from the October lows is usually powerful. So it depends on your half full or half empty glass that you're looking at. But most significant is what I'm concerned about right now is the speed within the markets of givebacks. That's really, to me, the issue. It's the rug pulls that occur that says, you know what, you're losing your footing. Fund managers are now switching as they've gone back to selling the last hour of the day. And I'd shown a chart that was shown to me a little while back, just before the big rally started, back to the new all-time highs in the Dow and the S&P. And that said that, in fact, you've got to be aware that when fund managers start changing their modus operandi and start, instead of initiating 3 o'clock buys, they start to initiate sells or very far fewer buys. And it's hard to gauge that. You only look back and say that was That's what was happening. Now, when I'm looking at this, what's most important, I've got a chart up here called Free, mentioned in the Dan. It's one of the shippers. Some of the shippers have done fantastically. This is a shipper, I guess, dry bulk shipper, and it's trading at 0.78. Now, you don't really want to mess around with these charts unless you really are a day trader, and even if it lasts a lot longer than a day, I'm saying a shorter-term trader, because they move so quickly, and when they give things back, they can give it back in the blink of an eye. And at that price, you've got to be real careful. So what I'm looking at here, it's gone from peak A to B to C to D. And this is leg E up. And Mike and Dan took some real nice profits in that. Most importantly is that the weekly chart has broken previous resistance. And that's a good sign. But at 0.77, don't go buying 10,000 of these things. It's because $10,000 going to $10 is a $990 loss. So just be real careful. These things have the same impact on your portfolio when they are losing as anything else. So you've got to be very strict and just use a very, I always say the smaller the price of the stock, the smaller a percentage of your portfolio it should be. In other words, don't say I'm using 5% of my entire portfolio on a $1 stock or a $2 stock. I just find that unless you are really involved in watching the market all the time, that's the same application that I have when people talk about real estate, as we did last night. If someone is in the business, it's not for me to say, hey, this is a good time to buy, this is a bad time to buy. They're in the business. They know about those things. But if they're not in the business, then you can offer recommendations by saying, hey, to be chasing and to be bidding, going into a bidding war when it's your first house, it's just, let's put it this way, it's not one of the brightest things that you can do if you're looking back a couple of years. Maybe historically it's a great thing to do because after the next cycle and all, you're at all-time highs in the property. But over a couple of years, you will pay a lot of extra money when you overpay at the wrong time. But if you're in the business, same as the market, if you're in the business, completely different story, trading a very low price, 0.79 stock. I don't mean as a professional. I mean, this is something that you do avidly, very successfully all the time. Then there's no problem. 0.79 is the same as $79 or $790. You've got to treat it with great respect. Let's go to our first caller. We've got Rich in Orlando. Hi, Rich. How are you?
Hey, Basil. How are you doing?
I'm doing well. Thank you.
Good. I'm doing fine also.
Good.
We spoke a couple days ago on this ERY and ERX, and I'm mostly interested in the ERY, and if you've had any, what are your current thoughts on that?
So this is the Energy Bear 3 times shares. So it's 300% long. It's 300% long on the short side. In other words, folks, let's just get this. It's in the beginning, for some people, it's a little difficult to get. Why? I'm buying something, but it can go. It's a short. What the heck's a short? This is a situation where instead of viewing your portfolio, because many portfolios in IRAs and different accounts, they don't allow you to short, or it could be you haven't got enough money that they don't want you to short. So what this allows you to do is to go short, in many cases, the entire sector, and you're going short by buying it because the institution that's put together this particular ETF has shorted all those stocks already. So all you have to do is to buy it as a long position, because if it's right, it's going to go up and make you money. I hope that that clears it up for some people. And this is exactly what happens. Now, this is the XLE is my core position here. And the XLE made a peak E, and now I have to put a down arrow. I was waiting for that when you had called. I said there's a good chance closing below the 9-period exponential moving average says that it's going to be, at least in the daily chart, a peak E. I do have a peak C in the weekly chart. Oops, I put an S. You should know that it's an E. So I've got a signal that says it's a sell signal to sell mode because it's a down arrow. It doesn't say that it can't rally. It just says I'm explaining the pattern, and it says that it's already broken the 9-period moving average. The stochastic has turned down to 42%, and the MACD is crossed negative. But you remember what I said to you? My only concern is that I don't have that kind of signal yet in the weekly chart, and I wasn't sure whether there was an alternative way. I've looked at this any which way. No matter how I look at it, I've got a peak C in the weekly chart. That doesn't say that you can't take weeks before you go to D, but it does say that there's a good chance that if it had to break 79.83, the XLE breaks 79.83, the low of the week of the 23rd of August, that pattern could have bought. And the other thing is I've got a leg F in the weekly. Now that F is so close together to the D, the E, and the F that yes, I could in fact turn it into an instant restart by calling it a B, but I don't even want to talk about the monthly chart right now because it's just holding well. It's going to be its direction is going to be dictated to by the way the weekly and the daily. Certainly the daily is going to have the impact. Now let's go to the actual study. It's held very well considering that from the low of the 24th to 3 days ago, the stochastic and MACD were at 1 point, and now they are much lower, and yet the price is above that level. So that's number one. Number two is, I suspect, being in the energy area, that any decline will be like a rug pull. It's just going to suddenly happen, maybe even overnight, for whatever reason. I'm not sure yet what that reason will be, but that's kind of the way I'm looking at it, because we know that in energy, surprises are usually to the upside. They have been for quite a while. So now let's look at this and say, what would be the level based on the root position of the XLE? It sounds like in music, the root position is 135, and then you get all these variations. This is the root position, and it says that 83.37 is really important as a low, because if that's taken out, I'm going to give it 30 cents leeway. I'm going to say if 83 is pierced, then I get something completely different. In the daily chart, it says, be careful, this is going to weaken, and that could impact the weekly chart, because the weekly chart is 82.90 as the 9-period moving average support. The MACD's, it's making price highs when the MACD is making price lows, but the stochastic is actually holding it up quite nicely. I'm always a little bit concerned when the MACD is pointing down and the stochastic is holding it up, because the MACD in the end is the longer, it's the greater tide. Okay, now we've got it clear. Under 83, your ERY is going to do very well. Over that doji candle 84.33 high of the 24th, 3 days ago, suddenly what we've got is the weekly improving, because it takes the doji candle of this week and it pushes it up into the inverted candle of the week of the 20th. And my theory is this is an inverted Roman candle, not a very big one, but it is. And it says if at any point the XLE gets to 85.04 or higher, it's pretty much going to test that previous high and probably go to leg D. So in terms of I know that from the tone of your voice, your question really is implying, is this a position that has legs and is able to go from a daily to a weekly and then possibly a 4 to 6 week play? I think that's kind of your question, right?
Correct. Well, I'm in the ERY. I'm in the bearish position, but it's like
yes.
The ETF is like it's just holding up there and holding up there, even though ExxonMobil looks like it's kind of pulled back.
Absolutely.
Pulled back. And it's like, well, why isn't this thing breaking? It's just sort of like hanging up there.
I'll explain to you why. We were looking at this the other day. Remember, I looked at Exxon, and I said Exxon is not acting very well. In fact, it's got a magnification of that same chart pattern we're looking at on a short over the period of peak AB. I didn't finish writing this, but that, I believe, is a C- failure. And if we looked at COP, and ConocoPhillips was acting very well. Didn't I notate this? Oh, maybe I just did it real quickly. I think that's what happened.
COP is doing well, but Chevron looks like Exxon, and
Chevron
and Oxy also.
Now, let's just do that. We've got a moment here, and I think quite a number of people would be very interested in looking at the group. So let's do this. We'll take a moment. I'm going to make this a red plus sign above the peak E. it's instead of a down arrow, because it hasn't yet, by the end of the day, I might have to put a down arrow because the MACD hasn't crossed negative and the stochastic's still at 83% and it's holding above the 9 EMA. And as you said, ConocoPhillips COP is actually holding very well. I don't want to just quickly grab the lowest bar here if I can. Let me just do this. So that is peak A. I'm doing the weekly chart. I'd like to look at this because these are your core, these are your leaders. And you want to be very much aware. I'm going to call that F for now. I don't see any reason why not in the weekly chart. And something happened with ConocoPhillips. It split or it did something. I don't know what it was. But I remember because
they did some kind of a split, or they spun something off.
They spun something
a while back, about a year ago.
And then they created a new series of stock. I remember that.
Yes.
So ConocoPhillips looks like it's doing well, but on a daily basis, it's real close to pulling back. And at 70.10 COP is saying that if at any point in the next 2 weeks it breaks under 68, that is going to be called, I'm going to call that a peak F top. If it holds well and then makes a new recovery high, I have to call it an alternate count, and it's going to C. I don't have a choice right now but to say it's just continuing the pattern. There's nothing to talk about in the weekly chart because the technicals so far are really good, and the monthly doesn't have a very long history, but it's in leg D. And the other one was Chevron CVX. Let's go to CVX. Oops, I typed it into the wrong place. CVX right there. And I'll tell you why I wanted to look at this, because it's part of the pie that I'm looking at. I'm looking at bonds. I'm looking at the dollar. I'm looking at the VIX. I'm looking at the sectors that have done fantastically and starting to turn down. I'm looking at the RTH, the retail index, which seems to be making a pretty impressive top right now in the daily. Maybe the weekly is going to follow, etc. So the energy sector obviously would be one to look at together with copper. Well, CVX made a peak D. It doesn't. I haven't yet got the down arrow because the MACD hasn't crossed negative yet. But it's got that double top pattern in the weekly chart, and it says, you know what? It might go into a trading range between 128 and 118. Very nice trading range, but still a trading range if you're not doing anything with it, but if you have it as a long-term position. So I wouldn't even recommend taking anything off Chevron at this particular point unless it started to take out 120 to 119 support. I'd say, you got to be a little bit careful there. Maybe take something off. So this is your dilemma. Your dilemma is that up until now, you've got a rotation that says the reason why the XLE is stuck in its little range right now is because this particular group is being treated probably still a little bit like a dividend group rather than like as a capital gain a group. So until that changes, I don't know if you're going to get a big move. So here, it's really easy for me. If you go to the ERY, the parameters on the ERY must correspond to the XLE, and it says a breakout above 2510, the high of the 24th, and this is the Energy Bear 3 times shares, trading at 24.69, down 6 cents. A break above 2520 that holds. This is one of those times I don't want you just to pop up and come back because that could start to form the H pattern. Mm-hmm. What you want to see is a pop that holds, and you want it to take out the high of the candle of the 11th, 25.45, and hold there. On the downside, if it takes 24.26 out, I'd say be a little careful. Start tightening your stop. But basically, I'm going to be watching this. Today's Thursday, between Friday and Monday. Let's have a look at it together again. But I'd hold it right now, just as you're doing. Okay, Rich?
Thank you very much. I appreciate it, Bill.
Thank you for calling. I'll be right back, folks.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, and long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position, subscribers sold recently for plus 42% on parts and plus 64% on rest. And Hertz Global has a core position for 6 months. A current position, entered as a turnaround company, is trading over 100% of its entry point as a portion sold earlier for a plus 21% gain. Subscribers to The Opening Call see the Chapman Wave techniques demonstrated and explained daily to also educate investors. Now you can get a free 2-week trial. Basil Chapman's newsletter, The Opening Call. Just visit the front page of TFNN.com.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades resulting in 1 loss and a combined profit of 129%. Our next move, it's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. In the remaining time that we have, what I'd like to do, I've got questions, a couple of questions. Then, will GNK, which is Genco Shipping and Trading, go to a peak D? Well, it's got a little mini A. It's got in the daily, it's gone to peak A, B, C. Pulled back quite sharply, well, relatively sharply to the 9-period moving average, gone A, B, C to another one. So that's the first one is a failed one. This is also looks like it's failing. I would say that the weekly chart has a really good chance to go to peak C, peak D. It's in peak C right now. It might need a little consolidation. The shippers just ran like heck to the upside. I think they need a little bit of a timeout now. We do have one that's at this point, they're just I don't know if we've had it a week. It's up 30%. I mean, that's crazy. It was up even more earlier on. New recovery high. I'm expecting it's going to pull back. So, yeah, I don't know if it's going to give a peak D in the daily. It should have, but I think it's used up its time with the momentum. That's that squash between the MACD and the stochastic. So it might just have to consolidate, and then it will suddenly pop up to a new recovery high just above 5. That's my thinking there. But it's starting. It's moved to the upside. You might have to consolidate some. Next question was SO. I usually have this one all notated, but it's somehow in this particular chart formation, the white background, I don't. SO is Southern Company. I'm a little concerned about some of these energy companies. This is a peak ABC and it's failing. I would, if you're long, I'd put a stop somewhere around 40, a stop on a portion of position, somewhere between 41.54 right now, somewhere between 41.20 and 39.40. Wow, if it takes 40.65, the low it was made 40.63, that area, the low that was made at the beginning of September, then that weekly chart says not only is the 200-period moving average a magnet, it's going to have to come down and then try to break above it. So it's really important that it gets to 42.50. It's only a point away, and it really needs to do that, and needs to do that quite quickly. The weekly went to ABC, D, peak, E, and it's made a left side, right side price time match. No, it came in even earlier. No, it looks, yep, exactly. And to the right side, and it went right under the 200 EMA. Usually you pop back up after that. It's done that, and now it's fading. So I'd be real careful with Southern Company. In fact, the monthly looks like it's on its way down, and so does the weekly. I would not be looking at this as a buy and hold. I'd be looking at this as potential short if it could pop up a little bit more. And now we have a question from Louis, wanted to know, one of my subscribers, AGNC. AGNC is very interesting. It made a peak D-top, and what I said to him is, it has to hold the other 2 days ago, I typed back, has to hold the 23s, but it gapped down today from the daily. My biggest concern is that AG, I don't even know what it does, American Capital Agency call, maybe insurance or something. The monthly chart looks terrible. This looks like it's got an H pattern. I'd be real careful with this one. In fact, I might even consider shorting it if it had another rally towards the 24 area, because it looks like that H pattern is very... it's determined. It just keeps wanting to go down. Can't break above the 9 EMA. So we've got Larry Pesavento coming up, and of course a wonderful show as always with Larry, because shows all the way through the day. Let me just do this while I've got a moment here. I'm just going to give you parameters that I'm looking for. The Dow is trying to have a comeback here, but that 9-period moving average at 15,366, which it tried to break above, couldn't, and now it's down. This is going to be the area between 15,366 and 15,390s, maybe 15,520s. That's key. A break decisively above that would be really positive by Tuesday. A break and a close under 15,200, and I'm saying to myself, uh-oh, not good action at all. And that's one of the reasons, perhaps, why I'm starting to see so many stocks show up as potential shorts rather than the potential buys. That's not to say there aren't stocks that I still want to get in. We have tried to initiate buys, or we have for the upside trades, but I'm looking at more and more potential for shorting. So I hope you have a wonderful day, everybody. That's today's day, Thursday. Thursday I'll be back with Tom later in the afternoon, 5:20. Stay tuned for all the wonderful shows here, and I will speak to you tomorrow. Have a good day.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing, and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.